Hello guys, FX Bright here, the trade guru. So listen guys, on this video I want to teach you guys my ATM strategy. I call it ATM because it's like going to the bank and withdrawing money, but this time not with an ATM card but with your knowledge. This strategy involves using the trend line, the RSI and the Fibonacci to make you a lot of money. And so guys, my WhatsApp number is on the description of this channel. If you want mentorship, just do contact me. So guys, let's get back into this video and I will see you guys after the intro and the disclaimer roll. Take a look at this. The market was able to come down all the way from this point and came up and made a kind of higher high, higher low, right? So you can see how this point is higher than this point. So a higher low has been made in a seemingly downtrend. So the first thing we want to do is that we're going to begin to think that it is possible for the market to have begun an uptrend. So what do we do? How do we determine the trend of the market? So that's the first thing you need to do, determine the trend of the market. So I'm going to come here and I'm going to draw a trend line, right? I'm going to draw a trend line just to determine the initial downward move of the market. So you can see the market came all the way down. Now, because the market has been able to break this particular point here, I will now begin to think. Now remember, by that time, this place has not formed, right? I will now begin to think from this side that it is possible that the market wants to begin an uptrend. Now, I'm not going to say it has begun an uptrend yet. I just think in my mind that now this is how you trade. You trade by probability, by assumptions, until you get to a place where it becomes concrete. So for instance, now the market has been able to break here. So I'm thinking that it's possible for the market to begin an uptrend. So what I will do is that what you want to do is that you want to also allow the market to break this side, right? So once the market breaks this trend line, you want the market to break the swing high that brought it down before it broke. So which is this top here. So what I'm going to do is I'm going to just take up this tool and I'm going to draw it here. Now, notice what I'm trying to do. I drew this line, this red line here because of this swing high here. So now that the market has been able to break this side, I need the market to also break this side for me to call these an uptrend, right? For me to say that an uptrend has begun, for me to start trying to either buy the market, right? So when the market broke this point, I'm not buying yet. I'm not buying. So the market would have come here, hit this point, came down, formed a higher high and started going up. Now you can see how this higher high has confirmed this breakout from this point. So a higher high has formed, but I'm still not taking the trade yet. What I want for the market to do is that I need the market to now eventually break this top, this resistance zone here, which the market successfully did at this point. So the moment the market was able to break all the way up to this point, I have now confirmed to myself that an uptrend has begun. Now listen to me guys, now we've been able to confirm that an uptrend has begun. What do? The next thing we will do is to wait for the market to retrace and start buying. So you can see how I didn't just come to this market from this point and started buying, or maybe I didn't buy because this breakout happened. I'm buying because the market has been able to break this and now come back for a retest. Now this retest the market is coming back from doesn't mean I will buy because it is now a retest. Now listen guys, I'm giving you guys a full strategy how to think, your thought process, because your thought process in trading is very important as taking the trade itself. If you don't get the right thought process, you might be able to miss out on how to take this trade. Now listen guys, so obviously this is a trade that has already happened, but I'm just trying to analyze it for you guys so you guys can see how you can think within the space of the market. Now this market has been, it started coming down all the way to this point. So what do? Now this is now a retracement, right? So what do? We're going to have to test the retracement, but before we do that, we have to find a good spot Now, when this retracement was happening, what we'll do is that we'll look to this side of the market to see the good spot where this market should be able to retrace to for us to consider this retracement valid. So we're going to find a good support and resistance zone around this side so that we can validate this retracement when it gets to it. So when you look to this left side of the market, what you will see is that this point was a good support and resistance zone. Now, I'm not just talking about a place that was a support. I'm talking about where acted as a support and resistance. So if you can look to this point, you can see the market came here, it bounced, made a reaction, broke, came here, hit it, finally broke, bounced. So you can see this point I drew is now a point of interest, a support and a resistance zone. So you want to, as much as possible, try to look for where acted as a support and a resistance zone. So also this downward side, you can also call it a support and resistance zone. But it's important for you to grab the first support and resistance zone and also monitor the last one, because if you look to the lower part, you will see that this side also was also a good support and resistance zone. But also this I'm going to show you guys something real quick. This side also was also a support and resistance zone. So what you will do is that you will allow the market to retrace to either this or this. Now the problem with this is that if the market retraces to this, remember this retracement, we will now have to capture it in a Fibonacci, right? So I'm going to just zoom in a little bit so we can see it clearly. In fact, let me go to the 30 minutes time frame so we can see this movement of the market a little bit more clearer. All right, guys, so this is the 30 minutes time frame. Now take a look at the market. Now I'm saying that the market was able to retrace to this support and resistance zone, and like I said, if you look to this side of the market, you will see how this zone was a very good support and resistance. So you can see how in the 30 minutes time frame it became clear how the market was bouncing on this point and bouncing, this place was a very serious support and resistance zone. So it was a good point to anticipate the market dropping into that zone. So now once you get to this side, you want to use your Fibonacci to be able to test that area to ensure that it's a good Fibonacci zone, and also to determine for you the kind of take profits you would have. Now this is different. I'm going to show, if you watch my previous video, you will see where I talk largely about the Fibonacci. So when I drew this Fibonacci from down to this point, we can see, let me stretch it a little bit far so it's clearer. You can see that this market started retracing at the 61.8 Fibonacci, which is a very good Fibonacci. And this also implies to us that this is a deep retracement. So I call any retracements that goes below the 61 all the way to the 78, somewhere around this side, kind of retracement. I call those kind of retracement the deep retracement. And because it's a deep retracement, our take profits is going to, let me take this out. Because it's a deep retracement, our take profit is going to not be so far, right? When the retracement is not so deep, around 38.2 to 50 Fibonacci, that is a light retracement. That's a simple retracement. So because of those kind of retracement, you can take very high take profit. That means the market is trending. But when the market makes a deep retracement, it does mean that the market is not really trending like that. So your take profit is not going to be that far. So what I'm saying is this is how this is how I draw my take profit line. I draw this one from the top and I drag it to the bottom, and it's just a retracement of also that leg. So what I'm saying is this: if I'm able to find my entry somewhere around this point, my take profit is usually at the 129 Fibonacci, right? And I can also decide to hold it to the 161 Fibonacci, but this is the point where I take my take profit, 129 Fibonacci ratio, right? So how would we have been able to enter this point? Now remember, we've been able to first of all determine that this point where the market is retracing to is a good Fibonacci ratio, which is the 61.8 Fibonacci, and we've also been able to determine that towards the left of this side, this point was a good support and resistance zone, and price was able to dip down. Now what I want you guys to now know about using the RSI on this side is that this is what I want from the RSI. I want this RSI. If you can take a look at this, my RSI, this is the RSI period of 7. So if you can take a look at this RSI, I want the RSI to go below this 50, right? You can see my RSI has the 70, 50, and the 30. So as long as my RSI goes below this 50 or even gets close to this 30, this is now a good RSI for a buy. Now, assuming all these things happened and my RSI stayed above 50, I would still not take this buy. Why? Because it's called relative strength index. It usually determines the overbought and oversold side of a market relative to the one that previously happened. So what I'm saying is this. So because this RSI is low like this, it means that relative to the previous overbought and oversold period, this is also considered oversold. So therefore you can buy. Now, it doesn't mean you just take the RSI in isolation and just go and be buying anytime you see it oversold. It's talking about relative. It's talking about previously, this side is also an oversold compared to the other side. That's what relative is trying to talk about today. So once we look at the RSI and we can be able to see the RSI here and we can see all these things have happened, we go to the lower time frames and we can be able to take a buy. Now, how do you take a buy on the lower time frames? Basically, there is going to be a structure for me here. If this is the 30 minutes, you want to go to the 5 minutes, find like a W, find like a change of character line somewhere around this point, and you will be able to find a very, very good buy in the lower time frames. Now, I don't want to waste too much of your time in this particular trade. I just want to show you guys how it goes. So once you're able to take your trade in this side, I told you you're going to take your take profits in that Fibonacci, like I just drew here for you. I said you're going to take your take profit like this, right? And you're going to hold that take profit. Guys, listen to this video again if something confuses you on this video. You're going to take your take profit somewhere at the 129 Fibonacci. Now, look at this side. At this point, the market was also retracing. But why should we not have taken this retracement or this one or perhaps this one? Now listen, we are going to now look at also the left hand side to determine where we would have been able to take. Now remember, I told you this trade is a trade that's already happened, but I'm trying to teach you guys the mindset behind analyzing this market and being able to take this trade based on this strategy. I'm going to draw the trend line all the way up to this point, so you can see how price has been able to interact with this line and giving it a support base. Now, this is not the only reason I will buy now I'm just trying to tell you why this point is not the point to buy. This point is not the point to buy, neither is this point the point to buy. Why? Because there is a trend line traveling all the way that price would like to touch, right? Price would like to touch the bottom of this trend line, but it's not just the bottom of this trend. It's possible for price to touch the bottom, just react a little bit and break towards the downside. But what will give you the motivation to understand that this particular point is very, very good for price is that you have to now look towards the left and see what price was able to do around that zone. And if you just look, and you don't need to look too much before you see how price has been able to react all the way from all in the past to that zone. So you can see how this point was a good price was able to bounce off this point, bounce, came all the way to this point, bounce, whatever. Price was doing a whole lot of drama around this zone. So once you draw the zone, you've been able to capture price at this very particular point. So this point becomes a high probability area for price to make this retracement. Now that our first confirmation has been achieved. Now the second thing we want to look at is that we want to look at the RSI, and you can see that the RSI has gone below the 50 and is even touching this 30, which makes it very, very, very valid. Now I told you, anytime all these things happen but the RSI still stays above 50, you probably want to leave that trade alone. So now, because the RSI has gone below 50, hitting this particular point, forming this good confluence here, you can tell that this market is probably about to go. Now the last thing we need to find out is the Fibonacci retracement of that zone. So what we're going to do is that we're going to take out the Fibonacci and we're going to draw the Fibonacci all the way from this point. So now, I hope these lines are not confusing you. Just let me delete all those lines, so in case you're not seeing it very well, it can become a little bit clearer, right? So I'm going to draw up the Fibonacci, right? And I'm going to put the Fibonacci all the way from this point to this point, right? So you can see that the Fibonacci was retracing, around this point. Sorry, let me draw up that line again. All right, good. So you can see that the Fibonacci was retracing around the 61.8 Fibonacci. So this is called a deep retracement. So because it's a deep retracement, we'll be able to find our buys here in the lower time frame. So for a break of structure, so once you go to the lower time frame, this is the 30 minutes. Once you go to like the 5 minutes, you're going to find a break of structure. Price will definitely form a structure and it will break it. Finding entries is the easiest thing. So just go to the lower time frame, look for a break of structure. Once the price breaks structure, you get into the market somewhere around here. Now, once you get into the market, you're going to put your SL just below this zone. Then you're going to put your take profit. Now, I told you, because it's a deep retracement, our take profit would not be so high. How are we going to put our take profit? Our take profit will also be a retracement of this leg. So once I draw this all the way to this downside, I told you our take profit. So now, because it's a deep retracement, you will figure that our take profit would not be so high. Our take profit will just be very, very, very close. It will be a retracement of also this leg all the way to this downside. So what we're going to do is that we're going to make it a retrace. It's going to be a retracement of that leg. So what you can find is how the market, once we're able to take our buys from here, we will hold the market I told you we are going to exit the trade at 129 Fibonacci, right? So somewhere around this point is a very good place to exit the market when it's a deep retracement. So once it's a shallow retracement or a light retracement, we can be able to target for higher, right? So but on this kind of retracement, and in those types we use the extension, but in this type we still use the Fibonacci retracement and target for a 129 Fibonacci retracement for our take profit. Now, I hope this is very, very helpful to you. I hope you're able to understand what I'm talking. This is a full strategy. This is how to analyze the market. The first thing you need to do is to figure out the trend. Find a way to figure out the trend. The market is going to break the trend line and also break the swing high that brought it down. The moment you find that, which is like this one, I drew a line here, the market is able to break this one and break also this particular swing high. So the moment the market broke the swing high, the next thing you're going to be looking for is a retracement. Once the retracement happens, you look at your RSI, ensure it's good. You look at the support and resistance by the left, ensure it's good. Draw your Fibonacci to find the retracement and also find the take profit using the Fibonacci. Once you're able to do that, guys, you'll be able to find very, very good trades on every platform, on every indices, synthetic indices, volatility, whatever it is you trade, crash and boom, Euro USD, whatever it is you trade in these currencies or commodities or indices, you are going to be very profitable. So guys, I hope this was helpful. And also you can check my I have my Signal group on the description of this channel, and also if you want to DM me for mentorship, also I will be able to respond to you. So I'll see you guys in my next video.